guys, now this is a story here. Let us start. Now you have the notes, right? Huh? Okay, I know you cannot print, but something wrong with PDF. I don't know why. My soft copy also it's went missing, so I cannot recreate PDF again. If I convert this into Word also, the table all went missing, formulas all missing. So what will you do, guys? It's not locked, but I don't know what happened to PDF. It's not even locked. If locked means definitely will ask for a password, right? Never ask for a password. So what do? You open through browser, Google Chrome or Internet Explorer or Firefox. You open through that, the PDF, then you can see the link button. Link. Okay, don't use the PDF. PDF won't show the screen. So you use browser like Google Chrome, Firefox. That is someone messaged me and asked me how to okay. So use the browser and print Google or whatever Firefox. Okay. Yeah. So but you don't print the whole thing here. You just print until topic 7. Okay. Your syllabus is up to topic 7. Okay. Diploma is up to topic 7. Okay. So now, okay. So here I'm done. Now it's FM. Okay. Yeah. Banyak M. So again, 4 credit hour. Okay. 4 credit hour. Huh? No, I mean the credit hour. 3. Okay. But however, it's 3 also. It's a very tough subject. Okay, compared to QM. Huh? Tough. Now, why I'm telling this is tough because normally the students won't get it for the first time. Because it's more to finance, like more to practical one, application. Okay, if you go work, then you can understand what's going on. So normally the full-time students won't understand what's going on. So this is nothing to more memorizing here. Okay, I know there is a theory here. We have a theory, we have a calculation as well. Okay, but the theory part is more to what? Understanding. Understanding means what's happening in the real world outside there. Okay, like financial crisis. Okay, how to solve a company problem. Okay, or what is the financial problem in the company, then how you solve it. That kind of application you can here in finance. That's a finance. Okay, that's why it's called financial management. Manage your finance. So we start with the assignment first. Okay. Yes. No more class test. Okay. No more class test. Yes. So your assignment. Okay. The first part is going to be. So your assignment is going to be 2,000 words here. Individual assignment, 2,000 words. Okay. But I'm going to make it easy for you. I'm going to separate this into 1,000, 1,000, and it's going to be a very open question. So the first part is going to be discuss the financial crisis. So this is going to be 1,000 words. Second part is going to be So we have two parts here. One is the financial crisis. Another part is the working capital. Discuss the uses of working capital and importance of working capital in the company. So this part we first. The second part we haven't yet. Okay, this is more to our topic in your notes. Okay. So once we enter the topic two, then you can start to what is working capital. So working capital is basically we will take almost 3 to 4 classes to finish it off. Quite very long topic here. Okay, so slowly we read. But number one is awkward question, financial crisis. So as you know, we currently the world is undergoing a financial crisis, correct? Okay, so you can discuss anything regarding a financial crisis. Discuss anything means any country that you want. Okay, I leave it open to you. Okay, I don't want to force you that you have to do Malaysia. No, you can do any country. You can choose any country that are undergoing a financial crisis. Then you can do it. So, what you should do in this financial crisis here, guys? So since you already separate, definitely you have to do the intro, the content and conclusion for financial crisis. Same thing for the part two as well. Intro, content, conclusion. I make it simple for you. Now, so in financial crisis, guys, don't always think when I say financial crisis, it's a bad thing. Am I right? Okay, always a bad thing happens in the country. No. You also must think what is the good thing happens in financial crisis. Financial crisis, there is a bad, there is a good, there is a pro and cons, correct? Okay, so you have to think. For example, I give you one example of financial crisis. So in the financial crisis, what happened? The oil prices went up, correct? Recently, the oil prices went up so much, correct? Okay, until it becomes cheaper than what? Nescafe. Okay, and it came out in newspaper. Rather than drinking Nescafe, we're drinking what? Petrol, right? Okay, 1 liter Nescafe is 2 ringgit and what? Cents, and one bottle of what? Petrol, 1 liter is 1 ringgit and 60 cents last time, correct? So last time the petrol price is went down to 1 ton, they call per barrel, okay, and went down to $20 per barrel, right? 20, 21 per barrel. But now of course it went up to 60 back lah. Okay, now it went up. But still cheap, right? Still cheap. Okay, 1 ton is what? $60 per barrel. So you have to think what is the pro and cons. For example, the oil price went down. It is good for who? Consumers. Okay, good for the consumers. So there is a good impact on what? Financial crisis. So there is a good impact on certain person of financial crisis, and also there is bad impact on certain person of financial crisis. Bad impact for who? Manufacturers. Okay, the suppliers. Suppliers is a bad impact on financial crisis. They have went through a what? Bad situation. Okay, like organization, for example, PKT is undergoing a financial crisis, correct? Their sales has went down because of financial crisis, no business, correct? Sales is going to go down. But consumers also has good things like oil prices went down, certain prices went down on financial crisis. Okay, so you have to go and do some research. What are the good things and what are the bad things happen in financial crisis? That's done. So the one you get it done first before we move on into the part two. Okay, so I think that you can get it done in a one time. Should be okay. Because the open question is very easy. Get it from internet. Okay, so you have the e-library, right? You have a e-library access right now, so you can get it all the information from there. Now no excuse. Okay. Don't tell last time Google and apa. Now you got millions of books over there. Millions of books. Get it from there. E-library. Okay, now can we start our first topic? Okay. Now your exam, let me tell you your exam. Your exam, don't think that you memorize then you go vomit, yeah. Okay, it's not going to be like that. It's more to understanding. I'll give you a case study question. Okay, kind of case study question. So you understand the question, then you come up with a what? Solution. That is finance. Okay, I'm definitely not going to ask what is working capital. No such thing. Okay, final sem ready. Okay, so no such thing of what is my working capital, what is finance credit. No. For example, I'll give you um, like this thing, for example. Okay, I'll take this thing, Brahat, a case study, and I'll say, let's say Brahat has went through a financial crisis, why, and so on. Okay, I'll give you all the information. Then you have to tell me the solution, for example. What can be done to solve the financial crisis? What they have done that makes them go through the financial crisis? Okay, the finance problem. What they should do, what they should not do. So you have to list out an essay. Okay, so you write down the problems, then you write down the what solutions. So that's how going to be your final exam question. And of course, calculation as well. Okay, calculation is going to be like ratios and all that. You have NPV. Remember, last time we done business math NPV. Remember? So the one will come back, but it's a basic NPVs. Okay, we will learn the advanced NPVs. Okay? Yeah, good ready. Number two. Now, don't be so serious. This is going to be very interesting subject. If you think it's interesting, because for me it's very interesting subject. It's nothing related to accounts here. Okay, you can throw it accounts away. Okay, you come to finance, you can throw your accounts away. Nothing related. Many of you might think that accounts and finance are the same thing. No. Okay, accounts is more to what? You record the past information into what? A statement. That is account. But here, it's more to analysis, more to what? Future analysis. Okay? Investment. How to make an investment in the future. How you design which investment is better. How to avoid a risk for investment. So on. Okay? Very good. Let's start guys. Now when you saw the word of finance, what you can think or imagine? Money. Okay, so what else? Just tell me, later I'll relate all the points that you tell. Money, that's all. Somehow what you can think about finance? Only money, come on. Problems, okay, come on. So far, I got 2 points. What else you can think about finance? When you saw the word of finance, what do you can imagine? Of course, we can imagine money. Yeah, we can imagine problems. Some more. Take CP project as an example. It's business, right? What do you face? That is finance. What do you face in CP project? Huh? Late. Late. Lambat. Yalah, first class sudah lambat. What came? Of course, difficulties. Some more. What else you can imagine? Come again? Invest. Okay. Some more. That's all. That's all about finance. What do you learn in CV? Tell me. What do you face in CV? You do the project, business. You face a lot of problems. You think a lot. That is finance. Now we're going to put it into what? Theory part. We're going to put it in theory now. You face money problem, difficulties, investment, some more what? You finding for what? Finding for capital. Some more? Profit and loss. Think about profit and loss. Come on. What else, guys? Now you have to start think critically. You have to think a lot on finance, so that then only you can answer. Come on, guys. Now, finance is not like QM where I teach them, you see the calculation, you understand. It's not like that. Finance, you must answer me. You have to think, then you know what's going on. Statistics. What's statistics? Come on. What else? Share, okay. What is that? Huh? That's all of finance. Yes, sir. No, finance do not only deal with just counting cash. That is accounts. It's not the accounts. You counting cash, you are considered accounts. I don't say you as finance. Maybe I just a bit downgrade. Not even accounts. Bursary. Okay, under the bursary. So you have to think a bit more high level. When it comes to finance, it's not only counting cash. Like what you do, we look at the problems, we look at the money, we look at the raise, we look at the what is that? Investment, we look at the expansion, we look at the development, we look at the ideas, okay, we look at the goods that you should buy, okay, we look at the marketing, we look at the what? Objective, number what? We look at the funds. What funds you need? What type of money you need? Okay. Number one. Shares. A lot, right? See? Come on. Assets. Liabilities. What type of expenses? Okay. You have to think that, am I right? What type of expenses? So that is finance, that I can say a lot and go, okay, but this is the main things that we have to think only. Okay, now look at that. The first one. We have objective of a company here. Now, when we say objective of a company here, guys, what you can say about this objective of a company? When you open up a business, what's your objective? Profit. Increase the profit, correct? Someone increase the sales, and if you are working under some other people, for example, you have to increase the what? Sales, profit, and you have to increase the wealth of who? The owner, correct? Or the shareholders. Okay, you have to increase their wealth. Okay, that's the objective always. We have three objectives here. One is the profit, sales definitely, and also you have to increase the wealth of who? The shareholders, the owner. Okay, so that's normally the objective. Now, how about the risk, guys? How about the risk? How about risk? What is risk? Problem. Risk is a problem. Yes, risk is a problem. Everywhere we have risk, right? Suddenly the air can fall on top of her, then she dies, correct? Okay, that is also risk. Everywhere got risk, correct? Okay, so but we talking about business risk. So business risk means what? What type of business risk we can face? Huh? Government procedures, okay. Some more regulations and all that. In CB project, what do you have faced? Economics, okay. There are also risk, okay. Not stable. What else? Sponsors means capital, lah. Okay. Capital. What funds we need to raise? It's a problem. It's a risk as well. What else, guys? Some more what risk we have? You open up a business. What risk you will face? Loss, risk of loss. Okay, some more. Coming in? Okay, employees turnover, employment risk. Some more. What else? Currency. Okay, currency risk. Because different country, different currency, right? Okay, might go up, might come down, currency risk. Some more what? Inflation, deflation, okay, recession. So all this is a risk, right? All this comes under risk. Okay, we've got a lot of risk that involved when you open up a business. Okay. Next, financial intermediaries. Now, who is these guys? Financial intermediaries. Yes, bank. Okay, intermediary means the middle person. Okay, orang tengah. In other words. Okay, I know everyone knows bank. Is it the only person bank? Along, yes. Okay. So we have another guy called Along, but we don't call Along. Don't write in the exam Along, yeah. Okay. Along, okay, that's a improper word. Okay, what is the proper word? We call it financial institution. Okay, financial institution. Or you also can write financial providers. Not a problem. I still accept that word. Okay, but the proper word is a financial institution. Now, can I ask one question, guys? Is there a bank is a loan shark? Yeah. Yes. Yes. Bank has a loan shark. You also are alone in a different category, right? Okay, they have a different license. Now, why? You have learned in a business maths, remember the secure, unsecure, remember? Okay, that is bank, am I right? But under the bank, we have secure and unsecure, remember? Okay, now what is the difference between these two, secure and unsecure banks? Now we have to learn this. Last time you learned the calculation, I just explained the basic. Now, let's go more in depth. What is the difference between secure and unsecure, guys? What is the difference here? Secure and unsecure. Any idea? Secure means what? Wow. Boleh lari. Now, secure means you pay less interest. Okay, you pay less interest. That means you have what? Signed contract with them. You have put something into a guarantee, correct? Okay, you put something into guarantee. But we don't talk about what guarantee is that, but let me tell you the basic part. You put something as a guarantee to take up the loan. Okay, now that is called secure. But unsecure, you never put anything into a guarantee and then you just take up the loan. Okay, that is called unsecured. And also the interest will be lower or higher? Higher. The interest will be higher. So when I say higher, how much will be higher? If you take a normal loan, how much will be the interest? 3%? 4%? Around there, right? Okay. If it is an unsecured loan, how much will be, guys? 9%, 10%. Let me tell you, do we have interest of 20%, 30%, 50%? Got it? Yes, we have. Now, you just learned secure and unsecure last time. Let me tell you, in finance, later on, not now, topic number 3. Topic number 3, you will learn a source of finance, a topic called source of finance, you will learn all type of what? Finance that we have outside there. Okay? We not only have secure and unsecured, we have junk loan, we have mezzanine finance, okay, we have subordinate loan stocks, okay, which is all this is more worse than what? Unsecured. Okay, more worse. When I say more worse means it's like the interest is very sky high, right? Rocket. Okay, like 30%, 40%, 50% also got. Okay, 50% interest. Very high, right? But why they want to take this kind of loan, guys? Is there people are taking this kind of loan? Companies are taking this kind of loans or not? Yes, that's why there is in the notes. People are taking this kind of loans. Companies are taking. Why was that? Any idea? Why company want to take this kind of loan? Since bank have their loans, why they don't want to take that bank loan? Could they reject? Not to say could they reject, no other choice. Now see, a company can take up to certain limit only, right, from the bank. Okay, the bank will see how much your asset value. Based on your asset value and revenue of a company, they will give a loan, correct? Okay, so you already take, for example, 5 loans. Okay, 5 loans from 5 different banks, for example. Can you take further loans? Sometimes you can be rejected, right? Okay. Now, what is the next option you will go for? Unsecured. Now, unsecured also they have a certain limitation. Okay, so they will take up that one also can reject. Then you go for what? That mezzanine finance. Okay, junk loan. So this is all very high interest. Okay, that's a different category. Okay, so that's about financial intermediaries. Now let's go into the next part. Non-current assets. Now guys, like just now we discussed under the finance we have assets and so on, right? So we start with the non-current assets, which is also known as what? Fixed assets, remember? So when you want to buy assets, it can be any assets, guys, even it can be a table, it can be a icon, it can be a projector, whatever. Okay, it can be a building, but you have to decide whether the assets that you buy is going to be a profitable or loss for you, right? Okay, because assets can be a same item, but it can be a different brand and different pricing, right? And different useful life. Okay, so you have to think all this before you buy an asset, right? So how you calculate, how we know which one is better? When I say which one is better means better with a lower price. That is finance. Okay, that's how you open up business. That's how you cut costs, right? Okay, so how you calculate using what? Investment appraisal. Remember you have done this before in business math. Payback period, ARR, accounting rate of return. Okay, yeah, last time. Okay, payback period, accounting rate, NPV. Remember net present value. Now that is very basic, guys. Very basic, which is I give you value, you just calculate, right? Use the formula and calculate. But the actual NPV, the investment, because you will learn later in topic 6 and 7 advanced, okay, which we will include the tax, we will include the inflation. Okay, because in the real world we have inflation and what? Tax. Okay, we have tax exemption, we have to pay tax, so we will include that and calculate. Okay, so the question is going to be a bit long because of those. Okay, that's like a very like look like a case study. So you have to think, and then you have to calculate. You have to say whether you agree or you not agree the project. Okay, so not only we're going to use for assets, we also use for what? Investment. Okay, just put a note here. That topic is not only for assets, we also use for what? Investment. Okay, when you want to go for new investment, whether the investment is going to be a profitable investment or what? Loss. Okay, so we use the NPV to calculate. So next we have the working capital management. This is topic number 2. Okay, this is topic number 2, which is on the next class we will do it. We will start on the next class. Okay, quite long topic. Take 3 to 4 classes to finish this. Okay. Now, what is this working capital, guys? Before I go into this, let me explain what is working capital. Now, working capital is daily capital. Okay, you need that daily basis. Why you need that daily basis? It's like a cash. The capital is going to be the cash. Okay, it can be a cash, it can be a customer or whatever. But you need that for daily to pay the what? The daily expenses. To pay who? Suppliers and so on. Okay, but it's considered as daily capital. Just put it down. Okay, working capital means used for daily. In other words, short term. Okay, just put it there, short term. So working capital is for daily basis and it's considered as short term. So under the working capital management, we have current asset minus what? Current liabilities, and we call as net current asset. Okay, now, in other words, working capital means, guys, just very carefully, working capital means current asset more than what? Current liabilities. More. It must be more. It cannot be less. Okay? Working capital must be current asset more than current liabilities. What happens if it is less, guys? What happens if it is less? If your current asset is less than current liability, what happens? That means it's not working capital. It means it's going towards what? Bankrupt. Or liquidity position, in other words. Okay? Going for bankrupt. So you always must look after what? Your current assets must be more than current liability. It cannot be current liability more than your current asset. There's something wrong with your business. Okay? Remember. So guys, remember, I won't repeat again because when we move on into the next topic, I won't repeat again current asset, current liability. I just will mention what? Working capital. Or I just will mention short term financing. Okay? Short term financing means what? Working capital. So you remember that way. Okay? Short term means what? Working capital. Working capital means what? Current asset and current asset. So you remember that way. Okay? Next we have the long-term financing. Okay? Now under the long-term financing we have non-current liabilities. In finance we call it a very short name is what? Debt. Okay, last time they come with a very long name, right? Non-current liabilities, NCL. None. But I make it simple, I just call as what? Debt. Okay, in finance we call as debt. Utang. Okay, utang. Debt. And then we have another thing called equity. Okay, now let us start back here on the debt. How many debts we have, guys? How many types of debts we have? We have loans, we have ventures. Remember you learned this in accounts? We have mortgage, okay? But like just now I told you, we have more than that, right? Design finance, down loan, subordinate loan stock, convertible what? Loans, and so on. Here we have a lot of things here. So it comes to the what? Debt. How about equity? We have learned this before in accounts. How many equity we have, guys? Yes, the shares. How many types of shares we have? How many types? 2, right? What is this? Ordinary shares and preference shares. So what is the difference between these two? What? What fix? Okay, it's like let's recall back. Ordinary What is ordinary? Ordinary shares. What is fixed? Huh? Interest. Are you sure? Eh? When you buy shares, we pay what? The company normally used to pay what? Dividend, yes. Okay. Ordinary shares, normally the dividend is not fixed. Am I right? Preference shares, the dividend is what? Fixed. Okay, that's the difference here. Okay, but we have the other difference as well, but we will look at the topic number 3 later. Okay, don't worry, more in detail. Now, guys, so what I told you, short term means what? Working capital. So under the working capital, we have current asset and current liabilities. Okay, long term is what? Non-current liabilities, which is the debt, and equity. Remember, this comes under long term. So I won't be mentioning equity, debt, and so on. I just will be mentioning long term. So you should know. Okay, long term is what? Next, financial management function. Look at the first one, investment. What to invest in? Okay, what to invest in? You have to think, when you open up a business, we have to think what type of investment we should do. So we have 3 type of investment here, guys. Look at the investment part there. Capital investment, financial investment, and what? Working capital investment. So guys, it's easy to remember. When I say investment, you just remember in this way, CFW. Yeah, okay, CFW. Remember that way. Remember in a key point. Okay, investment CFW. So CFW. C means what? Capital. F financial. W working capital. Remember this. Okay, CFW. So what is capital investment? Capital investment is your non-current assets. Guys, please, this is the one I want to be precise here. In your exam, do not ever mention asset. Your answer will be wrong. Okay? When it comes to finance exam, you have to be precise here. Do not ever mention asset. I know students only used to say asset, but asset got 2. Non-current and what? Current. So you have to be very precise. Look at that. Capital investment is what? Non-current asset. Working capital investment? Current asset. So you have to be very precise. If you mention, for example, in case accidentally, capital investment, you say asset. What asset? So your answer will be wrong. Okay? If you say asset for capital, you say asset for working capital. Never differentiate. So you have to be very precise. Capital investment is non-current, working capital is current. Financial is very easy. When we say the word of financial, it's always about what? Loans, shares, bonds, okay, design finance, etc. All kind of financing. Okay, comes under financial. That's why it's called. Okay. So CFW, remember that. Next, finance. What funds to raise? Finance. Look at that. So what funds to raise, guys? This is the arguments that started almost 100, 200 years ago until now. We have no conclusion for that. Okay? No conclusion for that. No concrete answer for that. What funds to raise is depends on what? Organization. Depends on what business they are doing. Okay? Depends on the size of the organization. So don't ask me, I myself don't know. It depends. So when you open up a business, you yourself have to balance it up. Okay? You have to balance it up yourself on the criteria of your business that you're having, correct? Okay, like your CV, you know what you should do, how much you need, right? You automatically balance it up, correct? It's the same thing. don't open a business, we have to answer. So we cannot answer generally how much we need. Okay, that's why I say depends. Okay, so the word of depends there. Okay, depends. So in your finance answer, when you do a case study question later on, guys, exam, do not ever say yes or do not ever say no completely. But most of the times your answer will be what? Depends. Okay, most of your finance answer will be depends. We explain the problem, but do not ever say or yes it will fail or yes it will succeed. We don't know. Most of the time it depends. Okay? So the overall funds required by the business, internal or external source. Now what is meant by internal source, guys? What is meant by internal? Any idea? What is meant by internal? Internal source of funds. What is that, guys? Internal means from your own company. For example, normal business, is it internally means your own. What is that? What is internal? Maybe your own pocket money. Okay, that can be what? Internal. Yes. Own capital. Okay. Own pocket money is your own capital. Internal. What else? Shareholders is not internal. Okay. Shareholders is not internal. You are selling shares and you bringing the shareholders in, right? External. Okay. What is internal? Can we say profit is internal? Do we say profit is internal? If I ask you, then there's something wrong. Think carefully. Can we say profit? Can we use profit? Sure not. Can we use profit, guys? Can we use net profit? You have learned net profit in accounts, correct? Okay. Can we use net profit? We take the net profit, then we spend. Can or not? Yes or no? Which one? This one or this one? Which one? Yes. Sure. Sure. Depends. Why depends now? Now think carefully. Think carefully. Can we use a net profit test? Now I know most of the time students will make these mistakes. Every time they will say profit, profit, profit. But what profit? We have so much of profit. So in finance you have to be precise when you answer. If you say profit, your answer will be wrong. That's why you say net profit, right? You cannot use net profit. Your answer is wrong. You cannot use net profit yet. You have to use what? No. Retained earnings. Okay, you have to use retained earnings, guys, not profit. Do not ever say profit. Wrong. Why? In accounts, do you saw this word before? When you learn accounts? Are you sure? There is another name called for retained earnings. You also can call as reserve. Ever saw this word before? Yes. It is the same. Reserve. What is retain? What is the meaning for retain? You hold or you keep, am I right? That's what they call retain. Retain means the final profit after minus everything, after you pay everything. That means what? I know in accounts you have learned until what? Net profit, correct? Easy to get net profit or not? Easy to calculate or not, net profit? Yes or no? It's easy to get net profit. When you do the statement for net profit, is it easy or difficult? Let me tell you, it's supposed to be very easy. Okay? Because the statement does not end here. This is not the profit. You cannot use this profit. If you use this profit, income tax will put you in a prison, in a jail. Okay? You cannot touch this profit yet. Okay? Now, you still have a calculation after this. You have to minus what? Interest. Okay? Then you will get profit before tax. Then you have to minus your tax. Then you get profit after tax. Then you have to minus what? Dividend. Then only you will get your retained earnings, which is you can use that money. Okay? Now you can use the money. After you what? Pay tax. After you pay tax, whatever that you want to do can. No problem. Okay? This profit after tax you can use. No problem. Okay? You want to pay dividend or you don't want to pay dividend or later I'll explain that. Okay? Dividend is very much. Hence, this profit after tax is actually the same. Okay? But the statement we call as dividend, you get it. But if you never pay dividend, then this becomes retained, right? Okay? So just remember that. Profit after tax and retained. If you pay dividend, then it becomes plus. No, this becomes retained. Now, you must pay tax. After you pay tax, whatever that you want to do can go. Can you use this profit? No. You touch and see. Okay, but normally there's so many people who will touch this illegal. Okay? But you don't use this. So in the exam, please don't say profit here. You have to use the name of what? Retained earnings, or you use the word of reserve. Okay? Don't forget. That is the money that you can use to spend for your investment. Remember. Okay, if you want to invest or you want to grow your company, you want to expand your company, you must use retained earnings. Don't say the word of profit. Okay? Thanks. Now, next, look at that. The balance of debt to equity. Gearing. Still remember the gearing formula, guys? No. Still remember? The very important formula. Okay? This is the one I told you. Very, very important. This is still an argument here. That's why I said argument. We don't know how much we should maintain the gearing. Very high gearing also not good. Very low gearing also not good. Okay? So how much we should maintain? Depends. Okay? It depends on the company. Okay? It depends on the company. That's why I say the balance of debt to gearing. The gearing is a very important ratio for the shareholders to have a trust in the company. If the gearing is too high, you consider the company going towards what? Bankrupt. If it is too low also, that means the company is not performing well. You get it? So you must maintain an optimal level. Okay? So what is the optimum level? What is the optimum level? What's the answer? Depends. Yeah, it depends on the company. We don't know. Okay? I don't have the answer. It depends. Now, the mix of long term and of what? Short term. Very important, guys. You must mix this both. You cannot entirely go for short term, or you cannot go entirely what? Long term. You must have this mix of both. So one day, guys, we will open up a business. Remember, you must have this both. Then your business, your company performance will be good. Okay? If you don't have this both, then you are not performing well. Why? Let me ask you a question, guys. Taking loan is good or bad? Okay, we have dividend also, right? Okay, I'll come back to that one. Taking loan is good or bad? First answer me that. You want to pay dividend to the shareholders, or you want to take loan more? or you want to pay interest more? When you take loan more, you have to pay interest more, right? Yeah. Okay. You want to pay dividend to the shareholders or you want to pay interest more? Which is that? Why dividend? Why you want to pay dividend to the shareholders? Think carefully and answer me. Which one is you prefer? You prefer. You want to pay interest more or you want to pay dividend more to shareholders? Which one you prefer? You pay dividend, then shareholders will be happy, right? Okay. You pay interest, then actually you're paying interest to the bank. Bank will be, okay. But you have to pay, no choice. So which one? You want to take more loan and pay interest more, or you want to pay dividend and make the shareholders happy? Dividend, sure. Okay. So you don't. That means interest taking loan is not good. Okay, let me give you an idea. Yeah. Okay. Now, if I put this in a value, okay. Now, you have first situation here. You have 1,000 of profit. Interest is 100. Then you get 900. Tax is 10%, for example. How much here? 90. Then you get what? 810. Okay. You pay dividend 10. You get 800. Very good. First situation, yeah. Okay. Now we have to compare with the second situation. Same thing. 1,000. 100. So you get 900. 90. You get 810. But you never pay dividend. Now, let's compare the first and second. Which one you like? What's the case? See, first you like, you want to pay dividend? Which one you like? Now, let's put it, this not 10 ringgit here, 10 ringgit. Everything is ringgit. Which one you like? Okay. 10 million is like, definitely I'm not going to let go my 10 million to bloody shareholders, right? Okay. Now, dividend is not compulsory, guys. Put it up. Okay. Put it up. Dividend is not compulsory. It depends on your decision. When I say your decision, whose decision is that? CEO decision. Okay. It depends on the CEO decision whether he want to pay dividend to the shareholders or not. It depends. If the company have a billions of profit also, it still depends on the CEO whether you want to pay the dividend or not. Okay, I'll come back that later. So, since it is not a compulsory to pay dividend, so which one you will choose? You want to pay dividend? No. I want more dividends, right? So that I can spend more. So I will go for second. But do you like to pay interest or not? Do you like to pay interest? No, you don't like to pay interest. Okay, let's go for the third situation. Since you don't like to pay interest, that means 0. How much you pay here? Now what happens here now? What happens here now? If you don't want to pay interest, that means you pay what? Tax higher. So you want to pay tax higher or you want to pay tax lower? You want to pay tax lower, am I right? Okay, definitely you want to reduce this part. Now you know why companies are taking more loans and loans and loans, so much of loans, so that they can reduce the what? Tax. Okay, because interest has tax exemption. Remember. Okay, includes the tax exemption. Tax exemption means that's why it comes before the tax. You minus first, then you pay tax. Oh. Silence suddenly. Now, so tax exemption means it comes comes before the what? Tax. Okay, that's why it's called tax. Minus first, then you pay tax. But however, dividend for tax exemption, no, no tax exemption because it comes after the what? Tax. Okay. So no tax exemption. Remember, no tax exemption. So you cannot claim. Here we can claim. That's why it comes before the what? Tax. That's why we can claim before tax. Here we cannot claim. That's the problem. So that's why most of the companies won't pay what? Dividend. That's one of the reasons. One, it's waste. You're losing your money. Number two, we are not getting anything, right? Okay? We are not getting anything. So it's not going to reduce the tax. Okay? They're losing our money here. But interest, yes. You're taking loan, of course, it's for your own benefit because we want to grow the world. Company. It's good. Number two, it's good for what? Tax. We can claim the interest tax. Are we okay? So what is it? So you want to take loan more? Yes, definitely. Go for it. But you don't take so much. There is a limitation, guys. When I say you take loan as much as you can, you take until the what? The limitation. Okay. The tax exemption, there is a limit here. Okay. Only this much you can claim. Okay. The one it comes under the tax category. Now, go back to the notes. So why people don't want to pay dividend? Now you know, right, why people don't want to pay dividend? Look at that. Factors that will influence the level of dividend. Why people don't want to pay dividend? First one, profitability. It affects the profit, right? You saw this now, I put it in value. It reduces the profit and it doesn't give any what? Profit for us. It's loss for us, correct? Even though how much profit you have also, company won't pay. Okay? Company won't pay because you will lose money. That's one. Number two, growth. When your company is growing, guys, when your company is growing, you're undergoing under growth. Now, do you think you want to pay dividend? Which one is important? You want to grow your company or you want to pay dividend? You want to grow your company. So, you won't pay tax. I already explained the tax part just now, right? Dividend is no tax exemption. Okay, you no tax exemption. How about number four? Legal restriction. Now, what is this? Legal restriction means the government. Okay, what is this government that? Why government suddenly comes in? Example, let me give you a situation here. You're having a company and your company is already have a problem, financial problem. Okay, you already have so much of debt, and your company is already have a financial problem, and you still want to pay dividend. Canada. Canada. I'm talking about listed companies, right? I'm talking bigger picture here. You're not considering that, I'm talking about listed companies. Okay? Because listed companies will pay dividend, right? Cinderella won't pay dividend. Now, so listed companies having a financial problem and they already have so much of debt to pay. And the companies still want to pay dividend. Canada. Maybe you say you can, but the government will come and say, sorry, you don't pay dividend first, you pay what? The debt first. If your company go bankrupt, it will affect the what? The economy. Okay? Normally listed companies are listed in what? Stock and shares. Do some nature, right? It will affect. So legal restriction. From who? From the government. Okay? Liquidity. Very simple liquidity. Liquidity means what? Bankrupt. So bankrupt definitely you don't pay no money here. Now, and last part of the dividend policy. If you want to pay dividend, if you think and you already decide if you want to pay dividend, you have a three type of payments here. Stable dividend is very simple. What is stable dividend, guys? Every year you pay the same amount. For example, you pay 100, every year you pay 100, stable dividend, same value, stable dividend. Okay, every year is the same. How about the second one? Constant payout proportion. What is mean by proportion, guys? Percentage. Okay, percentage. Proportion means percentage. The percentage is fixed. For example, 10%. Every year is 10%. But is there a value is fixed? The dividend will be the same. No, because the profit will be different, right? But the percentage is what? Fixed. Just put it here. Residual approach. It is something different. Residual approach, for example, you have your profit, okay, your return earnings. You take your return earnings, you go and spend first for investment. Okay, you pay the other expenses you want, okay, you already spend for investment. When you have the balance after your spending, the balance you pay for what? That's called residual approach. After spend for all the other expenses, investment, after all the spending, the balance you pay to, that's called residual approach. Now, most of the company guys, they will say, I will pay dividends according to what? Residual approach. Now, most of the companies, they will say, I will pay dividends. They will promise that they will pay dividends, but they won't pay. And they will say that I will pay according to what? Residual approach. Why? Because they will do budget until what? Becomes zero. Okay? So then they will say, okay, no, all the budget fulfilled, no more money to spend for what? Yeah. And normally they will use that approach. If you got balances, do you think you want to pay dividends? No. Okay? So example of companies never pay the dividend back. Can you tell me example of companies? Huh? Okay. The example of a company which has never paid dividend is, you know who? Microsoft. Okay, Microsoft company. From the starting of the company until now, they never paid any single dividend. There are so many companies like Apple and so on, they never pay dividends until right now. Because dividend is not so important. And one more thing, if you want to pay dividends that's like Microsoft, do you think it's easy to pay dividends? How many shareholders do you have? I'm not say unlimited, but a lot, right? Okay, a lot. Okay, let me ask a question. Who's the owner of Microsoft? Brandon Ross. Bill Gates, right? Okay. Just guess how much shares you own in Microsoft. No need to be exactly more than 50%. He is a major shareholder, right? Just guess how much shares you own. 3%. Okay, 3%. Okay, now 3%. 3% and he is the major shareholder. Out of 100%, it goes 3%. Where's the other 97%? Where's the other 97%? The other 97% owned by the public and the other shareholders. Okay, that's why the company can grow bigger because they sell shares to get what? Money, the funds they generated. Okay, they cannot go and take loan. The bankrupts all go bankrupt, right? How many companies they have around the world? Okay, very big, right? So they sell shares, people buy shares, and they get the money to grow the company. So when they sell shares, of course the shares will what? Okay, same goes to Steve Jobs. You know Steve Jobs is a card from Apple, right? How come he is a major shareholder? Same thing, same story. You only have a few percent of what? Shares. So you only sell all the shares to make the company grow bigger. So guys, this is the point. If a Microsoft want to pay dividends to that kind of 97% of shareholders, they have to sell all the companies. Alright? How many billions they have to pay? So that's why most of the companies will pay. Normally the small companies will pay. Because only few shareholders. Okay, remember that. That's the point here, guys. Now, any question here? Any question? Any question about tax part here? Any question about tax? So what's interesting about tax? There's many ways of reducing tax, but unfortunately, business students go to the tax part. It's a very interesting tax here. Okay, yeah, taxation. Why not? Now, it's quite interesting what tax. Why you don't understand? Oh, separately. What your cousin what? Oh, pay for you. Who don't want to study, right? Actually, good. Just there's more calculation. Okay, normally the students don't like calculation. But it's quite interesting. Then you know what's going on, right? Okay. So, like, you know, other way to reduce tax, right? You know, other ways to how to reduce tax. Huh? You know why companies are used to buy assets? To reduce tax. Okay, you buy, like example, you buy a cable, you buy a aircon, all these other company brand, all these capable here. We call capital allowances. Every year you pay. You buy car under the company name, you can claim. Okay, so all this is capable. What else? You know, right now you like yesterday when I did the FM class with the city campus business students, they were very excited to ask how to reduce tax and so on. Okay, seriously, they were very excited and they were giving an example. How about CSR? So then I laughed, and I said, yeah, CSR is one of the way of what for tax. Yeah, that's why most of the companies are doing this CSR. Like when you want to go for finding for sponsor, some of the companies say their quota is finished. Right? You want to do charity, where the quota? Never think about that. Right? You want to do charity, do lah. Do lah, give lah. Give lah, charity where the quota. Why they got quota? The quota is actually what? That's not told. When you want to claim, there is a limitation in tax, right? Regulation. Right? They see the value of a company, how big the company, you will say, okay, your company value is like 50 million, I'll give you this much. So you got different company, different quota. Okay, so that's why CSR is very famous right now because they claim what? Okay, they have tax exemption for that. CSR. So you do CB project, very good. Okay, you do CB project, we do charity. Okay, and who got tax exemption? Thank you very much. Okay. So you do hard work, we do smart work. Okay? Yeah. So that's the thing, yeah. CSR has a tax exemption, that's right. Okay? So they will do this charity up to the amount of their limitation. Then they will claim. They will reduce the tax. Okay? Another method we call as the okay? Now you know right. So when you open up a business, you must know how to reduce tax. Right? Okay. Of course, all the companies going to reduce tax. Okay. Because you earn million, you have to pay million to who? Even me, when you go for work, also you must know how to claim your what income tax. Remember, okay? Because they will deduct first, then later they can pay. Not like last time. Last time we had to go and submit. Okay, last time we had to go and submit. Now government has changed the rules. I deduct first, then later you come and pay. So different story now. Huh? Save as much as possible. Create a receipts for that. Okay? Yeah. But of course, like me, I'm not married. If you're married, you can claim more. You can claim money. Huh? Uh, Never mind that. I know how. I already claimed to the max. I create you. If, for example, you buy newspaper, magazines, books, and all that claimable. No. As long as you have receipts. Yeah. As long as you have receipts. You ask for receipts. You know, office not. You know, last time, uh, the normal receipts cannot. It must be a print out instead. The printer receipts can. Okay, I'm submitting another one. Okay, if they ask, I just submit the receipts. Whatever. Sometimes I just create receipt. I will say, hey, but he receipt. So last year I already claimed, but I have no receipts yet. They come and ask, then I'll create receipts. I say, Google has the receipts. Okay. I say I go buy a laptop and all that, but I bought this laptop 4 years ago. Well, see now only I buy it. I go take. So that's how you claim your tax. Same goes to company, but company is a bit more complicated. Okay. A bit more complicated. It's legal on a paper, but illegal on what? Physically. Okay? That means you keep your cash, but you're not saying in the paper. You know black money, right? Okay, then it's called black. Okay, most of the companies do this. Okay? I'm not supposed to tell you, but you have to learn, right? Okay? You have to learn. So number 3, there's another famous method that all these companies do is they will go, for example, you have company A, okay? Company A have a net profit of 100 million, for example, okay? Then company B, net profit, sorry, net loss of 50 million, okay? It's a loss company, it's a loss making company. So what happens here is company A go take over company B. Okay, so in the paper company B is already lost how much? 50 million. So what happens after you take over? You transfer what? 50 million to cover loss lah. Okay, tutup cerita sikit. Okay, now, so once you already cover, how much your net profit balance here? 50 million, and you only paying tax for 50 million. Do we pay tax here? It becomes what? 0. So no tax because 0 you cannot pay tax lah. Okay, no profit. So you only pay tax for company A. Company A belongs to you, but you don't pay for company B, so you don't pay tax. So you only transfer to company B to cover the loss. But in the paper, physically the 50 million still is not. You get it? It is another famous method. Normally you can read in the news suddenly some big companies don't take over loss companies. You think it's okay? They're doing this. Okay? They're doing this all the time. Okay? Or another method they will do in a reverse way. They will make their own company go loss. Okay, like the company is not doing well, they will think I'm not working well. Okay, what they will do, they will make the company go loss. Because they will open up a new company. Okay, and then they will transfer the profit of the new company to the old company. So consider the same story, right? With this tax. And also they will get issues. Sometimes you can see they burn the company. They burn the company. Okay? it's lost, and also you get interest, and then you transfer, once you open up a new company, you transfer the profit. Okay? Most of them furniture factory, because it's seasonally affected, because whatever that you manufacture is already outdated, out of season. So you declare wrong, then you burn, get interest, in the reverse way. You think it's stupid, okay? They do this. So this is another way of reducing taxes. So there's so many ways of reducing tax. Lower tax here, corporate tax. Okay? That's why now you know, right? Tax consultant can earn more. This is what you learn tax. You know how to find a loophole in the tax. So that's the job of a tax consultant. Their job is always think how to find a loophole. Okay. So the government will try to what? Close the loophole, but they will try to find another loophole. But do you think the income tax people do know? They know. They know that they are doing these things. They also a chartered accountant, right? I'm also a chartered accountant. I learned the same thing how you learn. But they don't know where is that evidence. That's it. See, if they caught the evidence, they are gone to prison. Okay? That's it. So this is legal on the paper. If they found out the 50 million in your pocket, then you know. Okay? So normally what your company will do, the 50 million they will transfer to what? Overseas. Okay? They will transfer to overseas investment. Because some companies will have investment overseas. That's how it is. Then they will transfer back as white money. So this is all comes under tax. It's really interesting, but any question, guys? There's a lot, but this is a very famous one. Very interesting one. There's more interesting stories here. Okay. Okay, let's take a break first. Whatever. Why you see that? Hey guys, come. The forex part in a while. I'll tell you when. Okay. Come, let's start first. So, again, repeating the same thing on the next page. Objective of a company. I've already explained about this branch now. Okay, because the break objective of a company. Like you see, shareholders' wealth maximization. You increase the owners' wealth. In other words. Secondary aim is to increase the profit and what? Sales. Okay. That's the objective. It's quite easy. Next is the corporate governance. Okay, now this is the one I told you this time. In the dividend you saw the legal restriction, am I right? Okay, this is we call as the legal restriction. In other words, corporate governance. So corporate governance means is under the government there is a body. Okay, there is a body called corporate governance will audit. In other words, will audit these corporate companies every year. So what they do, guys? Why they have to do this? Because you see, when for example, like a Microsoft company, they have so much of shareholders, right? All that is the owner. Is it all the owner can run the company? No. Definitely there will be a CEO, correct? Okay. So the CEO is normally an independent person. Okay. An independent person. Now I'll come back to that. This is why I call it independent person. So CEO should not own any shares in the company. Okay. CEO should not own any shares. It's normally an independent. They does not own any shares. They are just like a normal labor, normal staff. Okay, they work for a company. So the shareholders cannot be the CEO of the company. So you all must be wondering, then how do it? How Dr. Manchu, how all this person is CEO? Now remember, all this person does not own any shares in the company. not under their name. Okay, so whose name is that? Under wife's name, parents' name. Okay, so they come to name. So then only they can hear the CEO. Okay, so like Bill Gates, the shares is under his what? Whose name? Wife's name. Okay. If not, he cannot be the CEO. That's the regulation of the government everywhere. Everywhere is the same. All the countries are the same. That's the thing, guys. If you look at it, you see like the very big companies, like the CEOs, normally they are very, very close with who? Their wife. I never heard about very big companies, husband and wife have been divorced. They would. Whatever wife asks, whatever wife asks, no problem.
If not, 50% of the property got
What? Everything got there.
everything.
Everything got. Because all the property, all the shares is under whose name? My name. Even a property if you own also, there is a limitation. If you own so much, there will be a question. There will be why CEO can own so much of property? So everything is will be under whose name? My name. Okay. So like take Datu Michael for example. Okay. So he does not own any shares. All the shares owned by who? Why? Okay. Same goes to the Stedman. All the shares owned by who? Miss Katie. Now you're right. Why? Very close. Okay. Okay. See all the Datus, all the billionaires, they are very close to their wife because this is the reason. Okay. So everything goes by their construct. Okay. Same goes to building. Who's the CEO of building? Infocred, right? Okay. Link Gautam, previously Link Gautam. So when Link Gautam runs the company, he is the CEO, but shares are owned by who? Why? Still under white name. Even Link Gautam runs the company right now. Okay, but still under mother's name. Why? So anything goes wrong, so who will be sitting in this tree? Guys, okay, they have to be very careful. Okay, when we start up a company, can Cynthia Bharat still under our name. Okay, the property is under our name because Cynthia and Berhad. That's why they call it Berhad. It's private limited, private. But when it comes to Berhad, I can't do that. Okay, there are different regulations. Okay, we have to transfer. So that's why we need a wife. That's why guys need a wife. Okay, now, so the corporate governance, there's no. Okay, but most of the time, right? Most of the times, the CEO will be the owner. Most of the times, like Dr. Michael, Chapman, Bill Gates, Steve Jobs. The owner will be the CEO. They just transfer the shares to someone else. But some companies, like Google, Pepsi, okay, all these companies, the CEO is a different person, different independent person, not the owner. Okay, they give it to a different person. So in that situation, guys, it's totally a different person, am I right? Person like this, anyone. Okay, so the corporate governance will come and audit whether that CEO is doing a proper job or not. Okay, is it making a decision in a correct way? So sometimes CEO is the highest position, they can do anything. Okay, they can what? Grab some money and put it into your pocket, right? So that's the job of corporate governance. They will audit whether they are doing it in a proper way. They run the company in a proper way. That's the job of CEO. Are you okay, guys? That's the reason. Now, next. Stakeholders, there's nothing much. Now, stakeholders means you only heard about shareholders before, right? This is something new. Stakeholder. Stakeholder means all these. Management, employees, community, customer, environment, stakeholders, government, and shareholders. So we got 8 items here. All these 8 we call in one word, stakeholder. So in the exam, guys, it's very simple. If you want to write an essay, don't go write all these. Waste of time. Just write one word, stakeholder. Okay? That's the use of that, stakeholder. Next, public sector. Public sector objective. Now, public sector means who, guys? Government. Okay. Okay. What is your objective? Don't tell something else. Okay. Do you want guidance? Now, public sector objective is what? Normally, what government do? Public welfare, right? They give, they help the public, giving charity and all that, putting up hospitals, police stations, okay, mobile and all that. Okay, so that's called public welfare. Nothing much, giving service to the public, yeah. Okay. Not so important. Public sector objective. Next, yes, that's important. The risk, yeah. So you have to memorize that. We have how many type of risk here? Okay. We have two type of persons here normally. Okay, two characteristics here. Rational investor means they like to take risks. Okay, they love to take risks. Risk averse means they don't like to take risks. Okay, so who like to take risks here? Huh? And yeah, entrepreneurs definitely they like. Now remember, even entrepreneurs, guys, they are risk averse. Don't get it wrong. Don't get it wrong. Even an entrepreneur, some don't like to take risks. They like to play what? Safe. Play safe. They move slowly. Some will move very fast. Some will move very slow. So those are moving very slow, step by step, are risk averse. But entrepreneurs, no. Okay. Like for example, like Warren Buffett. Warren Buffett, I would put it under what? Rational investor. He likes to take it. Okay? So risk averse is don't like to take it. So you must decide whether what's your character. Whether you like or you don't like. Like me, I love to take risk. Okay? I don't mind if I lost as well. I just want to give a try. Okay? That's my character. So you put yourself which category you want. So this is two types of risk that person characteristics. Okay? So you can use this word, you have to use this word in your case study when you write it. Whether rational or averse. Okay? Now, but guys, when you take more risk, the return also must be high, remember. Okay? You don't take risk and the return is lower, then you don't no point taking risk, right? Okay, remember that. Financial intermediaries, like this now, we already discussed, we have bank, we have financial institution, and that person will be in the middle of who? Investors and who? Borrowers. We keep money and the bank will take the money and give it to borrowers. Okay, that's a role. But let's go more in depth, which is the role of who? Financial intermediaries, guys. This is the role of financial intermediaries. We have 6 roles here. This is something that you just understand. What is the role? You don't need to memorize exactly. Just understand. Number 1, risk diversification. What is that, guys? This means reducing the risk by spreading investment funds over a wide variety of what? Investment. What is it, guys? Can you give me an example? How that works? How that works? How you want to reduce a risk in the investment? How that works? Any idea? Example, if you have project A, example, and you have 10,000 in your pocket, and you take 10,000 and invest in project A, are you taking risk or you reducing the risk? Why? You only invest in one project. If the project is lost, then you lost everything, right? Okay. But if you invest in A, B, C, D, few projects, are you reducing risk or taking risk? Why? How you assume that you reduce the risk? Yes, one might fail, another one might what? Profit. Okay, one loss, another one might profit. We assume at least we reduce the risk. Okay, but definitely not all 4 going to be what? Loss, unless we terribly love. Okay, all the 4 investment is terrible, then definitely. But most of the times, 2 loss, maybe 2 profit, or 3 loss, 1 profit definitely. Okay, that's how. But we cannot assume we do what? Calculation for that. Okay, you have learned this before. in the last semester QM. Okay, that's why I said you must remember one of the calculation. Remember how you calculate risk, guys. Remember how you calculate risk. Still remember how you calculate risk? QM last semester topic 1 and 2. Remember, I told it's very important, but this is basic that you learn now. And later you learn the depth one. Remember this? What is this? Yes, standard deviation. What is the use of standard deviation? Huh? No. I'm not asking the formula. What is the use? I told you the uses of standard deviation, right? Every chapter I told the uses, right? What for we need, but why we are calculating, right? Why we calculate standard deviation? To calculate for what? Race. Remember? To calculate the race. Okay. So now we will use that formula again, but a bit longer. Okay, a bit longer. That chapter we call as portfolio theory, guys. Okay, topic 9. Okay, topic 9, portfolio theory. In that topic, you guys will learn how to reduce risk in the investment. Okay, and the formula is going to be something like this. You want to see the formula? Okay, and this is only what? Yes, two investment, which is A and B. It's nothing much. It looks like very long, but it's actually investment A, investment B. It's for 4. ABCD, no? Same thing, it just increased to a bit more longer. Okay, which is standard deviation A squared, proportion A squared. Okay? This have been defined, then A, B, C, D, E. This have been given. Okay? Is it there? But unfortunately, you won't learn. But actually, it's not so hard. Trust me, it's easy topic. Seriously, the formula might look longer, might be freaking you out, but trust me, this is very easy topic and very what? Knowledgeable topic, because this topic will teach you how to reduce risk in investment. But unfortunately, business won't learn. Your syllabus is up to topic 7. That's why I asked you to bring until 7. This is 9. Okay? Huh? Reducible. Okay, so that's about this. So this is one whole topic here. Risk diversification. Comes under portfolio theory. But you won't learn this is the theory part. Number 2. What is mean by aggregation, guys? What is mean by aggregation? Separate, are you sure? Aggregation means you collect, right? Or you sum up, or you total up. That's called aggregation. Okay, in other words, for aggregation, we call as what? Cumulative or you can accumulate. Okay. Now, why the bank do this aggregation? What is the reason there? For example, banks take small amounts of deposit, aggregate them, and lend out large sums of money. We all keep small amounts of money in the bank. So what the bank will do, the bank will collect all the money and give it as loan to the other person. Okay, borrowing. So that's the role of bank. But look at the next part, maturity transformation. For example, banks guarantee depositors their short-term deposit while lending over long-term periods. Even though the bank takes our money and give it to the borrowers, okay, as a loan, but the loan will be not for 5 months or 3 months, right? It will be for 15 years, 20 years, right? But how come when we go to the ATM machine right now and we put our ATM card into the machine, we still can withdraw the money? How it goes? But they already give our money to some other person. How it goes? Huh? Free money. What's that? Now how it goes? However, that's called maturity transformation. That's the name of maturity. Maturity transformation means it's the cycle. Even though they take our money and give it to the borrowers, but the interest they get from the borrowers, they will give it to us. Okay? It's a cycle. Okay? Definitely bank also need profit, right? So the profit they get, they will give it to us. Our money. We use our money to earn profit. You get it? So it's a cycle. That's called maturity. So in order to explain very lengthy explanation in your exam, okay, just use the word of what? Maturity. Next, hedging. This is the one that you guys waiting for, forex. Okay, hedging. Look at that. Bank helps sell financial tools to reduce risk such as foreign exchange and interest rate risk. Okay, this is forex, yeah, hedging. Now, hedging is actually a technique to reduce what? Risk in forex and interest rate risk. Like forex means currency, am I right? When you sell or you buy currency, definitely you have risk. Risk of what? Going down and going up. Okay, different value. So how to reduce the risk? Like most of them, especially logistic companies will do this because they're dealing with overseas currency. So hedgings have few techniques and there is a formula, okay, to calculate the cost swap and all that. Okay, so you will learn here. But unfortunately, this is topic number what? No. 14, 15, 16. Okay, final 3 topics. The last 3 topics. Okay. After you learn all the basics, final 3 topics, after you won't learn this. No? That's a sad story, right? Okay, you want. But if you learn that, definitely you can play for it. You know how to play for it. Because you know how to read the risk of forex and okay. Sad story. Too bad. Too bad. Okay, it's gonna happen. So when it's gonna happen, you know, because normally accounting students will learn. Not even accounting students will learn all topics. They will just learn topic 15, the forex, the basic one, basic technique you will learn, but you won't learn the 15 fully, 16 the 14. You won't learn that. Who will learn this? You did the ACCA. Yeah, it's professional degree. And then you will know you do ACCA before then you will learn. Or you go for master in finance. There you will learn. Okay? Master in finance. Master in finance, and then you will learn. Okay? So you guys, when you learn, you won't learn. You will learn it when you go for your MBA. Okay, Okay, when you go for MBA, you have your finance paper there, but it's still optional. Okay, it's still optional. You want to take finance paper, you want to, but normally, if you graduate, you go work, definitely you want to do master, you take finance paper. Because you want to do it on foreign quality. So, next is making a market. What is it? Financial institution have to create new market for new financial instruments. So they will, bank normally will help you to design what type of funds that the company should go for. Like what I told you, we have so much of notes, right? Secure, unsecured, and so on. Okay, they will tell you, okay, you go for this, you go for this. Since your company situation is this way, you should go for bonds or you should go for unsecured, for example. Okay, so making a market. Advice. Financial institutions help provide advice to the private and business sector. Okay, so that's normal. But is that a free? No, expensive. Okay, very expensive. But normally, the number 1 and number 4 company will do by themselves. Okay, but bank also will do if you don't know. But normally the company will do. Okay, the bank will do another part. The bank will do the hedging on another part, which is when you deposit the money and you take loan on currency. They will do that part. But hedging techniques normally the company itself will do. Okay, ready? Okay. So very important hedging. Next. So we are in the last part of the topic number 1. Okay, financial market. Now look at that. You need to be aware of the difference between primary and secondary market and money and capital market. So guys, these two are different. Let me start with this first. What is this primary and secondary market? This is stock exchange. Okay. Remember, stock exchange got two parts. One is the primary, another one is the secondary. Okay. Now, what is the difference between a primary and secondary, guys? When a company, like for example, like PKT is a Berhad, right? Okay. Okay. PKT is a Berhad. I don't know. PKT might be Berhad. You already Berhad. You're going to be listed soon. Okay. So PKT is a Berhad. Now, Berhad, it doesn't mean listed. Listed means when you go into the stock exchange, then we what? Listed. Okay. So like Asia also, when they start their business, they start with the Sindram part, then they become Berhad, then they are listed. So what they did is, when they are listed, they are never straight jump into what? Secondary. They want to jump also, they cannot. They must go what? Primary first. Primary means what? Like your primary school. Can you straight go into secondary school? No. You must go primary school, then what? Secondary school. But if you are very scared, straight want to go into primary school, we have the kindergarten here. Kindergarten means what? AIM. Now what is this kindergarten? Alternative investment market. Okay, alternative investment market. Alternative investment market. AIM. Now, if you are really scared, want to go into primary first, okay, you can go into what? AIM first. If you are really scared, you go into AIM first. So you can start here first. If you are okay with the rules and regulations, okay, if you think that your company is stable enough, then you can move on into what? Primary. Then if you think primary was okay, then you can move on into what? Secondary. Now, it is very easy for you to be listed in AIM because less regulation. It's very easy. Same goes to primary. And if you think that if you don't want to be listed, you can withdraw easily as well from primary and what? AIM. But once you already move on to secondary, can you withdraw? Can or not? Can, but they won't allow. It's not easy. Not to say cannot. The regulation never says that you cannot withdraw, but they won't let you. It's like you already been trapped inside. Okay. Secondly is called the main board. Remember, what does that main board means? This is the main board. Okay. In Malaysia called Bursa Malaysia, right? It's called main board. Okay, all like listing, Maxis, DG, Telecom, okay, and so on, all are listed here, main board. So anything happens, like you see, our currency is going down, right? Every day by every day, like going down 4.47, right? Okay. Now, it is not entirely, we cannot blame political situation or economic situation. Okay? It is also based on what? The main board. Main board means those companies in the main board, if the company does not performing well, okay, it will reduce the value of the money. Okay? That's why stock exchange will very, very sensitive towards its secondary. This is very important. Anything happens, anything goes wrong there, then we are gone. Okay? So it's very important company there. Okay? And very stable company. And they won't let the company go bankrupt. If anything, if the company, if one go bankrupt, somehow the government will pump in money and make the company stable. It is Mars stable. Yeah, like Mars Airlines. They won't let. Because if suddenly one of the companies want to withdraw, that will reduce the value of the money. Okay? One and will affect our country economy. So now you know how important is that? Important. Okay? And how they analyze, how they know whether the company is performing well or not. Based on what? Based on earnings per share, EPS. Okay, still remember guys? Earnings per share, last time I taught in business maths. EPS, accounts also got right? Earnings per share. Now, it is a very, very important ratio for a stock exchange and a very sensitive. A very sensitive ratio, guys. Because if anything goes wrong on the EPS, that will reflect to stock exchange because EPS will determine the company performance. Okay, will determine the company performance. So that's why EPS is very important. It looks very simple, but EPS is very complicated. It's very complicated. So we cannot play around with EPS. Normally the company, like the listed company, the EPS they will take care so well so that it won't be affected. Okay? Even stock exchange also always watch the earnings per share. You don't care about the other issues. You just see the EPS. Okay? They always will be affected. That's why they call earnings per share. Okay? Any questions so far about markets? Okay, if you look at the theory over there, the market in which the security of financial instrument is created. Created means you're starting. That's why it's called created. Okay, primary school you start first. Secondary market, the market in which financial instrument that have already what? Been issued and traded. That means from primary I'm moving to secondary. That's the reason. Okay. Now, next, money and capital market. Now what is this? Money market concerned with short-term financial instruments. Guys, sometimes in your case study, they won't use the word of short-term. They will use the word of what? Money. Okay, sometimes I myself will use money market. Okay, when I say money market, that means what? Short-term. Short-term means what? No. Money market is short-term. Short-term means what? Working Capital, working capital means what? Current asset and yes, current liability. Okay. Capital market is what? Long term. Long term means non-current liabilities, which is the debt and what? Equity. Okay, don't forget. So far, so good. So far, you already remember? Memorize? So we just finished the introduction. Okay, of what? Finance. Okay. So, what do you think about introduction, guys? Complicated. No, this first topic is just says about what is going to happen on the upcoming topics. So later we'll go one by one into specific topics. This is just they talk about overall of finance. You just get a picture. Then we go each by each. Okay. So the next topic is going to be, look at that, purely on what? Working capital management. So this whole topic is going to talk about working capital and it's very, very long. Let me show you. Okay, look at that. Working capital, very long, yeah? Got calculation as well. Ratios and all. Come again? Which one, Brandon? What is it? Oh, alternative investment market. Long, isn't it? Then finish already. Okay? Yeah, 23 page. Okay, so that's why I said we will take almost 4 classes. This is a question here. Your exam question will be something like this. Okay, thank you so much.